Hello, thank you for watching. So as we have covered the basic, we have discussed the definition of risk, the risk management process, the expected and unexpected losses, and the risk reward relationship. Let's start discussing the major risk in the risk management framework. Okay, so the first risk that we are going to discuss is market risk. Market risk is basically the volatility, the uncertainty that comes from the investment in the market. By the market, we means different investment markets. It can be equity, it can be foreign exchange, it can be commodity, it can be bonds. Okay, so whatever volatility that comes from investments in these particular markets, that we also refer as systematic risk. That is something that we refer to as market risk. If we have invested in the equity market, there is volatility in there, that particular risk will be referred as an equity risk. If we are investing in the commodity market, if we have purchased the futures of oil, let's say of crude oil, the volatility in there in the crude oil market will be impacting your investment in the commodity market. Again, market risk, systematic risk. Then bond market. So if you are into fixed income securities or in the bond market, then volatility or risk can arise from there as well. So that's another kind. And the last one, but not least, is the foreign exchange risk. Foreign exchange risk is something that when you have invested in another country, in another product, in another currency. So if you are based out of USA and if you have invested in Germany, so whatever investment or whatever return you will be getting will be in USD and not in Euro. So you have invested in Euro, but you are getting returns in USD. So that parity, that changes in the USD Euro rates is something that is going to create a risk. Obviously, the upside or downside movement or the uncertainty regarding this currency parity will define the direction of the risk, but there is definitely some sort of risk that is coming out from the foreign currency market and hence referred as market risk. Thank you.